Welcome to this week's episode of Beyond the Balance Sheet. My name's Katie Collin, and I'm very excited to be talking today about the hot new topic of making tax digital, which is possibly the biggest reform we've seen to income tax in decades. I'm delighted to be joined by our Senior Partner Success Manager, Diane Holden from Xero, who we've been working with for a number of years and is going to talk to us today all about MTD. So Diane, thank you so much for joining us today. I know you're very busy, so thank you for your time and for joining us to talk about making tax digital, which is up and coming. So before we sort of jump into talking about the details around that, can you just tell us a bit about Xero for those people who don't know much about it?
Of course, Katie. Thank you very much for inviting me to take part. So Xero is a global accounts and bookkeeping software. It's cloud-based, it's real-time. About 4.5 million people use it globally. And it should help you run your business much more efficiently, whatever that business is.
Yeah, we absolutely love it. As you know, we're platinum partners of Xero, and for us, one of the big distinguishing factors amongst any of the other suppliers you see out there is just how intuitive it is and how flexible it is, which is particularly helpful for healthcare.
I think so. Don't want to offend you here, Katie, but we did build the software for the business owner, for the end user, not for the accountant. Sometimes the
okay.
accountants are a bit, don't like this. But yeah, everything we have is laid out in a way that would make sense to someone who didn't have an accountancy degree, didn't have years in practice.
Absolutely. And from working with us for several years, how bespoke healthcare is. So,
Very much so, yes.
yeah.
I learn something new every day.
Oh, good. So, yeah, Xero obviously is going to play a big role in making tax digital. So, for those of us who aren't accountants, can you just tell us a bit about sort of making tax digital? Obviously, being in Xero, you're very involved in this, and what our listeners might need to know.
Yeah, well, making tax digital for income tax actually follows on from making tax digital for VAT. So anyone who's VAT registered may have gone through this 8 years ago now. It's a directive by HMRC. It's to provide quarterly digital reporting. So it's going to replace that once a year self-assessment tax return that you've been doing up until now. This is actually, for a lot of you watching today, this will be the last year that you have to do that end of year final self-assessment tax return. From April 26 onwards, it's going to be mandated for a certain section of people, we'll talk about that later, to do 4 quarterly returns, fixed dates, and then there will still be an end-of-year final declaration, which is going to take into account other sources of income, such as dividend income or employment income.
Yeah, so it's basically like moving everyone who's having an income tax and self-assessment, moving them into effectively like a VAT return on a quarterly basis. So
Very much so.
a massive shift from what we see of that last minute end of year rush with tax returns that, we're very familiar with in sort of
Yes.
January, of that last final pull. And you're trying to remember what happened, 10 months ago at the end of the year. We're now actually finding this is going to be real-time updates going to HMRC. And how quickly do those submissions have to go to HMRC after the end of the quarter?
Really quickly, actually, Katie, you only have 5 weeks. So if your quarter would start in April, end in June, that submission has to be with HMRC by the 5th of August.
So it's exactly the same effectively as you have a VAT return. So for those of you who are a VAT registered business or maybe a dispensing practice, you'd be familiar with that. But of course, this is capturing income tax. So these are for individuals.
Yes.
So you mentioned, of course, that there were, for those people who were captured by this, it's not everyone, but obviously there's a threshold, isn't there, in terms of what level that's going to be?
Yes. So initially, from April 2026, the threshold will be those who have earned more than £50,000 per annum. And that would be from locum income, both private and NHS, and actually rental income as well. Or it might purely be rental income. So it could be that your spouse, if you have a larger rental property, could also find that they fall into this category as well. The year later, the threshold drops to 30,000, and the year after that, by April 2028, it's 20,000. There aren't that many people, particularly in the line of work we're talking about at the moment, that would be lower than 20K. So that's probably all of Ramsey Brown's clientele at that point.
Yeah. So it's interesting because, of course, it's the self-employed income, but that's really self-employed from a sole trader line of work, isn't it? So
Yes.
just to be clear, partnerships at the moment, partnership income is out of scope for this, but the plan is from 2028, partnerships will be included.
Yes, that is the plan. There isn't a date set for it yet, but that's what the government is working towards.
So, of course, you mentioned obviously a combination of self-employed income. As you said, that could be locum work. So that's a vast amount of what we're expecting. It could be private work that obviously you're doing through a self-employed basis. Company income, just to be clear, that's obviously out of scope because that's subject to corporation tax.
Company income is excluded. So your private income, and obviously if you're a landlord, any landlord income as well.
Yeah. So that's going to capture a lot of people, especially what we're seeing in the medical community is a lot of people kind of moving more into that portfolio GP style role, particularly if they're locuming. So a lot of people, their whole effectively income comes from being self-employed. So all those people are going to be captured.
Yeah.
But what was interesting as well is just you mentioned that point about the threshold dropping is, of course, what we'll probably see in 2026 is most people who are earning over 50,000, which will be locums who generally locum for most of their time. But of course, if that's dropping to £20,000, it might be people who are also got either a partner role or an employed role, but are locuming on the side as a second role.
Yes, maybe a couple of days a month might be enough to take you over the threshold when it's 20K. I think the other important thing to mention here as well is it is turnover. So obviously MTDs, if you're a self-employed business, if you're a plumber or you're an architect, it's really easy to think about turnover. But this is the total, it's just money's coming in. It doesn't take into account any expenses. So you may say, well, yes, my turnover from my property is in excess of 50K, but by the time I've paid all my expenses, I'm only really making £4,000 a year from it. It doesn't matter. It's turnover.
That's a really important point. And of course, when you look at your tax return, you're declaring the taxable profits. So you might think, oh, okay, well, my taxable profits are definitely below £50,000.
Yes.
This isn't going to affect me. But of course, it's the turnover, isn't it?
Yeah, that's not what you should be looking at. It is total turnover of the business income.
Yeah. And so we mentioned this threshold. Is that based on the 24-25 tax return?
It is, yes. So, I mean, actually, talking to other accountants that I work with as well.
Other accountants.
I know there's only one or two. But they're tending to look at turnover of, say, 45K and 25K because they would like to think that, working with an accountant like Ramsey Brown, your business would be improving year on year. You'd be making a little bit extra next year than you did this year. So you'll be in scope if your turnover is in excess of 50K. However, bear in mind that obviously, things cost more, invoice more. So, if you're quite close, you don't want to be penalised for not recording income when you should have done. So it is really worthwhile looking back, not just on last year, but on previous years and see where the trends are.
Yeah, that's a really good point, especially if you've got something like seasonal or fluctuations. And actually it raises the point that if you haven't done your 24-25 tax return yet, which I'm sure, given the time of where we are in the year, is probably quite likely for a lot of people because we're not in December and January at the moment. But if you wait till the very last minute to do that tax return, then what you might find if you do that by the end of January, that actually you're suddenly in scope from April 26. That only gives you 2 months to then find a methodology to set something up and make sure that you're reporting to HMRC on a quarterly basis. So that's not a lot of time really to prepare.
I mean, we've been working with you on this for 6 or 7 months now, and it's been in the back of our mind for a lot longer. So the clients that you've been able to move on already are in a really great position because it's new. You will get things wrong. This just gives you a few months to get used to it, the things that you'll need to do, and then some things that you may choose to do to make your life a little bit easier, make things simpler. And also, Katie, let's be fair, if the majority of your clients are leaving things till the last minute, you've only got a fixed amount of team to deal with their queries for this year, let alone help them get set up for next year. It would be unfair to say that you will be able to give more help, more hand-holding to those who think about this earlier rather than later, because you'll probably all be quite stressed in that first quarter of the year as well.
I don't know what you mean. We're very lucky. Our team are extremely patient. And of course, our clients are wonderful as well. But,
yes.
So what does this actually look like in terms of How do people make this submission to HMRC? What's the actual requirement? I mean, obviously Xero have been working with HMRC. I see, a lot of the stuff that you post online. Obviously, we work very closely with you. When we say digital records, what do we actually mean by digital records?
So with digital records, we require software that is HMRC recognised, which obviously Xero is, amongst a few other software. And you have to input all sources of income, all sources of expenditure. It has to be done through this digital software, and then it's uploaded to HMRC, probably by your accountant, probably by the team at Ramsey Brown. You do have the capacity to do this yourself. We don't stop it. I think you'll probably find that you will get far more benefit from having the team at Ramsey Brown do it for you, because they'll be able to. We're not expecting them to point out your errors, but they can point out cost-saving methods, tax planning, etc. If you're invoicing, which I know a lot of you won't be, but if you're invoicing, you can set that up through Xero. We can talk about that in a minute. Mainly for you, I think the two things that would be useful would be to make sure all expenses, all business expenses, are captured electronically. You can do that using any normal smartphone. We can help you with that. The team at Ramsey Brown can help you with that. And the second thing that's really important is setting up a dedicated bank account, a separate bank account. It won't cost you any more. If you can start now getting in the habit of having all your business expenses run through that secondary bank account, well, the one big advantage to that is that you're not paying the team at Ramsey Brown to sift out all your general household expenses. Why would you pay someone to simply get rid of 90% of the transactions from your bank account? That's what they're going to have to do before they can start. So taking the time now to set up secondary bank account purely for your business, whether that's your rental business, whether that's locum income, it'll just make things so much easier when you come to do it. You've also got to bear in mind, Katie, that for almost all of your clients, apart from the ones that you've got set up already, they're going to be doing 2 years at the same time. So they'll be doing this year that we're currently in, when the return isn't going to have to be due until January 2027. At the same time, they'll be doing real-time updates for the 26-27 tax year.
Yeah.
I mean, that would cause me to pull my hair out, and I know the software and I know tax returns. I'm not quite sure how someone who's not used to doing this, so they're not trained for years to do this, could actually deal with that.
Yeah. I think it's really interesting, the point about the bank account, because of course the way the Xero works is having the bank feed, so it links automatically into the bank account. And the idea is obviously that you link the bank account into the program. For people who don't know about Xero, it's a really clever software. Firstly, everything pulls in every day, and obviously you can code it to how you want to, and you can tell the software. But it also learns, doesn't it? So of course, everything, as you start to spend regular expenses or you get regular income, it will start to work out where it should post those things for you. So it can actually be quite a slick system, particularly if you've got I would say less complicated transactions. But it all kind of drives from that bank account. So having the separate bank account that then connects into Xero basically means you've got that sort of seamless process where all the transactions go through the bank account, that pulls into Xero, you press a button and it goes to HMRC each quarter, and you just can have a sort of sigh of relief. But for me, the other big thing is that separate bank account really actually allows you to capture those expenses that you might not even think about. So we have a lot of our clients who will say to us, I feel like I'm not being tax efficient, or I feel like I'm not claiming everything I should. When you get a spreadsheet at the end of the year saying this is the sort of stuff you can claim for, you've got to go back and sort of think, okay, well, I spent £20 here on stationery, and I forgot that I filled up with petrol here, or this toolkit online looked really cool and I can't find the receipt for it. Of course, you've got that separate bank account. Everything you use can go through that. And then you've got that automatic track, which is just great, because people are spending money all the time on their work stuff. They don't even realise that they're missing out on 40 or 45% tax relief on it.
I mean, travel, like you're doing that all the time. And you're right. If you get in the habit of separate bank account, but then also using a tool like Hubdoc, which comes free when you're using Xero, it allows you to capture those expenses, whether they're £5.60 or £560. They're being captured at the time. So you don't have to, you're right, you won't, I can't remember what I did last July. It's not going to help me at all. I can't really remember what I did last weekend. So, but if you're,
I'm sure it was fun.
I hope it was. But if you're capturing this information as you go along, it just makes it so much easier. I despair of people who will send in their tax information in January, but it probably also means that you spend your entire Christmas break just pulling pieces of information together. You dining room tables covered with scraps of receipts, things that you've missed out on because you said you've forgotten about them. You can set Hubdoc up to capture receipts that come automatically into your inbox by email as well. So, for example, flight receipts. If you're booking, you're not going to snap a picture of your payment that you've made to British Airways. But if they send you an email confirming your flight, then that can be forwarded onto software as well. So your professional fees and things like that are coming in that way. And then, yes, coffees, fuel, sundry expenses, when you've got a random receipt that you can just snap a picture of it. And again, Xero remembers where you've coded it previously. But actually, to go back on that, Katie, that one thing that people often worry about is that it will be done for them, and it won't. So even though it memorizes things, it makes auto suggestions. At every point, there's a chance that your client manager can step in and say, "Oh no, this wasn't this." This. We find people will often put travel in marketing and vice versa because they just think it's all there. So just make sure that it's recorded in the correct place. So anything that is done can be changed. It's almost like it's more a prompt and a reminder that you need to be using this.
Yeah, I mean, I think that's a really good point. And of course, making sure that things are consistent is really important for two reasons. So, one, if you do decide to look back, at what you've spent, and you suddenly think, "Whoa, I spent a lot on marketing," considering I'm a locum doing a few sessions a week, and that's not always a bit misleading. So it's good to code things in the right place. But of course, these submissions are going to HMRC on a quarterly basis. One can't help but think there's going to be some sort of tech at HMRC running algorithms on this, looking for anomalies and potentially opening up to tax investigations as well.
Yeah, I think so. I mean, it's done on a cumulative basis throughout the year, because there are some things that you will only have at the end of the year. If you're lucky enough to have interest on your savings, that's going to come at the end of the year. But flags will be raised if your submission is really low one quarter, really high the next. They're going to look for, unless it is a seasonal business. You mentioned that there'll be things like that would happen. But yes, I think just an actual getting in the habit of doing things early. Also, if nothing else, it means that you don't have your client manager at Ramsey Brown, breathing down your neck, sending you hundreds of emails, making phone calls, saying like, what did you spend this money at Curry's for? Just if you get in the habit of doing it, it just makes things so much smoother.
Yeah, absolutely. So, and you mentioned it was cumulative. So, of course, the submissions, and they are actually called submissions. They're not tax returns. There's 4 submissions and a final reconciliation, which effectively acts a bit like what we know as the tax return now. Those submissions are cumulative, so they build on each quarter. So you can go back and correct them if you realise you've done something wrong or you've missed something out. You can go back and edit that. But presumably that's quite powerful information then. If you've got kind of a cumulative position over the year, actually allows you to kind of start working out where you are really with your taxable income, what you think your earnings going to be by the end of the year, how much tax you think you're going to pay.
Absolutely. I mean, it's amazing. Again, the team at Ramsey Brown are going to be so happy with this because they'll be able to give you basically real-time information so they can spot trends. You can see it yourself as well. There's a really simple, again, it's intuitive dashboard. So everyone will have their dashboard at Xero. You can set this up any way you want. The team will help you sort of tailor it so that, the things that are most important to you, which could be the amount of money you're spending on marketing, postage, travel, whatever it is, or it could be the length of time that it's taking people to pay you. That's going to show on the dashboard as well. But the main thing that they're going to be able to help you with is tax planning, because there's nothing more frustrating. I mean, I know that you will not want a large tax bill. We all have to pay tax, but we all want to pay the right amount of tax. And yes, it's very upsetting for you to get this tax bill, but it's also very upsetting for the team at Ramsey Brown because to think, oh, if only I had this information 5 months ago, I could have suggested that we did X, Y, or Z. You've already mentioned, Katie, that you deal with a lot of clients that are in that awful mid-tax bracket where they can end up paying much more than they should do. So if you were able to spot this trend in perhaps September or October, rather than find out about it June of the next year, or God forbid, December of the next year, when it's too late to do anything about it, that is going to be a huge benefit to your clients.
Yeah, I mean, that's a question we get a lot is, how much is my tax bill going to be by the end of the year? And I don't mean the tax bill I'm paying in January for the year before. People want to know as they're earning. And some people are quite proactive in terms of monitoring things on a spreadsheet and saying roughly how much they think they're going to earn. But a lot of people don't. We're busy with our day-to-day lives, particularly medical professionals.
Yes.
It's not like they've got loads of spare time to sit and make spreadsheets and work out their tax. And that's what they've got us for. But as you say, I mean, we're coming up to a budget. We don't know what's going to be in that budget. I think it's probably not going to be a particularly favourable budget in terms of tax, given the situation. So there's a real opportunity with Making Tax Digital to have that real-time data during the year to do some really good tax planning. So you could say, if you're a locum and you're working all these sessions and you're really teetering on that £100,000 threshold, well, should I do those extra sessions or not? Actually, for someone who has 2 kids in childcare and really wants to be below that threshold, it's not worth them doing the extra sessions. No. Equally, if you're a partner and you're propping something up with the locum income and you can see that's going to take you over the threshold, you might say, actually, okay, well, that's going to take me over my annual allowance charge with my pension. There's just so many opportunities now where we're moving into that sort of real-time basis that we can be actually really clever with our tax. And for me, the really exciting thing, and I'm probably getting very excited talking about this, as you can hear, because I'm a very nerdy accountant, but it's really exciting to be able to give people meaningful advice, to actually give them the autonomy to make instructed decisions. So if you've got the information in front of you, you can make an educated decision. Yes, I want to keep doing those sessions. Actually, I'd like to do more sessions because we're buying a new house. What does that actually mean for me and money in my back pocket? Should I be pensioning that income? Should I not be pensioning that income? These are the questions we get all the time, but we're finally now going to have the information, if it's up to date, to really be able to advise people. And that's kind of the bit that we enjoy doing as accountants, is being able to actually make an impact for our clients. And presumably HMRC are sort of doing this to encourage people to have that real-time data.
Well, yeah, because HMRC want to know how much they're going to be collecting as well in tax dollars. They really don't want to be making decisions on government spending, not having any idea what money's going to be coming in the next 18 months. I think what is really interesting about that is you mentioned if they keep it up to date. Now, using a tool like Xero, it's not impossible, but it's quite hard not to keep at least some of it up to date. If you connect your bank feed and all your income's coming into the bank, the team at Ramsey Brown will have an idea of how much income's coming in. They won't know exactly which sources it's come from, etc., without seeing the invoice data. They'll have an idea of how much income's coming in. And on the flip side of that, if you record all your expenses, they'll be able to see how much expenditure is going out. So they can far better tell your profits than they could at the moment, where they're just thinking, oh, well, their profits last year were this. I wonder if they're going to be doing the same amount of work, the same amount of hours. If they do 10% more, I should probably warn them that they're going to exceed that threshold. But then you really don't know. Now, of course, you don't have to use the invoicing facility in Xero. I know a lot of your clients won't want to. They're using another tool instead. But if they do decide to use that tool in Xero, it's got lots of benefits. So first of all, the team at Ramsey Brown can see exactly what your turnover is made up from. The second thing is that you can, if you're invoicing the same client, the same entity, the same amount or similar amounts each month, you can actually set up one repeating invoice at the beginning of the year, and it will just reproduce itself each month. So it's sent out with or without your input. You can go in and check it, draft it, change it slightly. But the other thing you can do as well is you can add payment methods to it. Stripe is one that a lot of our clients use. And that way, the money's in your bank within about 2 days,
Yeah.
rather than waiting 30 days, 60 days, 90-day payment terms. So if you're in a position to be able to invoice your clients in that way, and again, I know not everyone is, then it's a massive tool, not just for you, but also for the team at Ramsey Brown, so that they can give you better advice.
Yeah.
Everyone likes to say that their advice is proactive, but it's only good if you've got the right data.
Information. Yeah, absolutely. And I think that's a really good point on the invoicing, because, I mean, certainly from the locum side of things, we often see people doing lots of different shifts and different practices. Something may come up. They're doctors. They're not necessarily looking to run a business in the same way. And actually, they might forget to invoice and then have to do 3 months worth of catch up. They might invoice late. So having that prompt on like the 30th of the month, let's say, the invoice goes into draft and you think, right, my draft invoice is sitting in Xero. I know it's there. I've got to send it out. Helps, firstly, the locum, because they're sending them out on a time. You can add the payment methods, as you say, so you can be paid quicker. Helps the practice, because the practice has got up-to-date invoices, so they can track their information more accurately as well. And of course, then they've got the tool to pay quickly, because there's a link on Stripe where you can just click on the invoice and off you go.
Yeah.
So that whole automation process, it just cuts down that paperwork trail.
Yeah.
And even people doing for private work, if you've got a list of invoices that you've done on Xero, you can do all sorts of, again, get my nerdy accountant side out, where you can do lots of different types of grouping and you can run lots of reports and you can say, well, hold on, I know I saw this patient. Why isn't there an invoice there for them? And you realize you might have missed an invoice. It's just basic things like that having that data at your fingertips is so powerful.
I don't know if this is something that could compare to, but for example, if you're running a garage, you can even run off reports of everyone who came for an MOT last October. So with 3 months to go, you could send them all out a reminder, telling them to do it. Now, are you running MOTs for your patients as well? Who knows? But that's a sort of similar thing. So you can, having this data and having previous years' worth of data can be really useful to spot trends, to perhaps allow you to. We've been talking a lot about perhaps stopping invoicing because you're hitting tax brackets and tax thresholds, but actually it could be a way of pointing out income that you're missing out on as well, if you do want to be earning more and moving up that way. So yeah, it's just a really, really nice way. And I think the other thing as well is it reduces human error. So I know so many people over my years working with businesses and now working with practices as well. Everyone loves an Excel spreadsheet. In fact, nobody loves an Excel spreadsheet more than accountants, actually.
That is true.
Even though they love real-time and online software, they also like that Excel spreadsheet. But Excel spreadsheets are prone to error, especially if they're shared and then formulas get corrupted, etc. And they won't show you the same patterns. They can only show you things retrospectively. You can't be planning going forward. So I think using a piece of software has got so many more benefits than just having that digital link to HMRC. So I think MTD for income tax, you're going to have to do it at some point, if not on the first session in next April, then over the coming 2 Aprils, yes, you're potentially going to be caught by MTD for income tax. But let's not look at it as, being caught. Let's look at it as ways to improve the way you're running your business. You may not think you have a business, rental income, locum income, you're not that plumber, that architect, that photographer, that we've mentioned previously. However, you are still running a business and you want to maximize any profits you're taking from it.
Absolutely. As you just had a thought while you were saying that about, I have a client who's a dermatologist and runs a private practice. And one of the things that we look at is, where are the profits actually sitting? What service lines actually make a margin? Is it, I don't know, Botox, or is it skin tags, or is it something
Teeth
else that it might be?
whitening.
It could be anything. But actually with Xero, because you can raise those invoices against specific, streams, and you can track expenditure against those streams,
Yes.
you can actually see, okay, it might take me 5 times longer to do that service and I'm making hardly any margin on it. Actually, I really enjoy doing this other thing. I can do it in 10 minutes and there's no cost to it, or minimal cost. So people say knowledge is power, but it's so true. And we don't ever think about it as a business, particularly in healthcare, because somehow that term profit or business is always, assumed to be a negative thing. But actually, you need to make a profit and have a successful business to be able to continue to operate, to look after your patients. And
Yes.
we forget that. So having that information to be able to generate that profitable business is really important for patient outcomes as
Absolutely.
well.
I think because if you're like you said, this is something you really enjoy. If it's an income stream, a service you provide, and you don't really enjoy it, and then you discover it's really not making you any money either, then you're not going to enjoy doing it. You need to think about your health and well-being as well,
Mm.
in order to just look after your patients long term, and in fact any family responsibilities you may have, any bills that you have to pay as well. So it does make sense to break this down. It could be, and it doesn't have to be the healthcare income.
Mm.
If we're talking to people who have properties, it may be that you can also track, you may be lucky enough or unlucky enough to own 2 or 3 properties. Equally, you can start tracking it by property. So it seems really obvious to say, well, that one's bigger, I can charge more money for it. It's bound to be a better. Perhaps it isn't. Perhaps your smaller property has far less downtime. You've always got someone waiting to move in when somebody moves out, shorter term lets, Airbnb type things. It could be easier for you to run, even with the increased cleaning costs and turnover costs. So it's really important to work with your accountant to set these things up in a way that you can track them. It's
Mm.
pointless putting in information if it isn't going to help you, if it isn't going to make sense.
Absolutely.
And I think that's where, because the team at Ramsey Brown only use Xero, and I've been using it for such a long time. There's things that you tell me about the software, and I'm like, oh, do we do that? It's fantastic. But I love when I get that feedback back,
Yeah.
or when you've given me a real life example of how it's made a big difference to someone. It
Mm.
shouldn't just be about numbers and figures and pounds and pence. It should be like outcomes in people's lives.
Absolutely. So, I mean, just talking a bit about kind of Xero and how it works. One of the things we love about Xero, particularly with MTD, is you can kind of do it yourself. You can kind of do it with your accountant, or you can kind of pass it over. And actually, I know we're accountants, but we find it very, very intuitive. We find it really good for non-accountants because of the way it's laid out, the way that it's quite intuitive. But that also opens a lot of opportunity, doesn't it, in terms of with making tax digital. Some people may be really tech savvy and say, well, you know what, I've got my own bank account. I actually have a client who has got his own bank account, is all set up. He, at the moment, keeps spreadsheets, but we've said to him, well, why don't you get yourself on Xero? Done, dusted, put all his links to bank accounts and he's ready to go. He probably doesn't need us to push the button. He might say, can you step in and have a look? And there comes phase 2 of like, well, okay, you got the people who are quite happy to put in the data, but they're not 100% sure, as you said earlier, is it in the right place? Have I treated it right? Is this allowable? Is this not allowable? Am I missing anything? And then we kind of take over and submit it. And then you've got some people say, this is overwhelming and I don't want to do this. I'm a medical professional. I don't want to do anything to do with this. And are you seeing Xero? You seeing that a lot of different accountants offering those kind of different models?
Absolutely. Xero, obviously, we love our accountants and bookkeepers. If we didn't work closely with them, it's fantastic. We get some great feedback on the software, what it can do. There's lots of other things that you can use the Xero Practice Suite for. But it's also really important to us that the user, the small business owner, is able to get something from it as well, is able to know their numbers. Financial literacy, it doesn't matter what type of business you're running, it's really important that you understand what's going on. So we hopefully keep building and developing this product so that people can use it themselves. Less people use it themselves and don't have any accountant support at all, because they appreciate that there will be things they miss. They'll be sort of obvious as there. And again, there aren't that many people who also want to give away all responsibility and just say, listen, Katie, let your team do everything. There it is, here's a big box of stuff in the past. Now here's a big digital box of stuff. Just sort it out for me. We do find that the majority of people are somewhere in the middle. They're interested in knowing, and they want to be doing some things themselves, even if it's just snapping pictures of those receipts. It's a start. Connecting the bank feed, your team can do the reconciliations, but it's really quite easy to. Actually, it's quite fulfilling in Xero as well. Approve.
I love
I'm
it.
quite happy with
I
it.
love it.
It's a bit like playing a game.
Okay.
Yes,
Yeah.
there are lots of things that your clients can do for themselves, but know that they've got the safety net where you will review, make sure something hasn't been coded to the wrong place, which is it allowable, is it not allowable? So I think most people fall into that category, but we want them to be able to go either way as well. So if they want to do everything, I would say those that want to do everything themselves should probably still partner with you initially, so you know that it's been set up correctly, and then just let them run with it. And I also know that you're more than happy to do everything for your client who really doesn't want to do it, or doesn't have the time to do it, or feels they don't have the knowledge to do it. It's probably more likely time than knowledge, because it is a very easy system to use. But even those clients, you do still require certain things from them. That one of the problems of you doing everything for them is that you may actually still spend longer at the reconciliation point asking questions. Well, what was this for? It's not very clear. It's come out of your bank, but we can't understand what this payment was for. And at the moment, you're only asking them those questions once a year, albeit it's after the fact, so they have to cast their memories back. You're now going to be asking those questions 4 times a year. So, I think they have to bear in mind that even if they're giving it to you to do everything for them, you can't make decisions on their behalf. You're still going to there's certain things that you're going to require answers for.
Yeah, absolutely. Yeah. And we definitely have a philosophy of we kind of work to what our clients want. So we have those clients who really do like to take ownership of it. And we have clients who find it completely overwhelming. And everyone's on a different digital scale and knowledge and interest as well. I think the partnering point is really interesting, because even if you don't need someone helping you with the declarations, the submissions, the bookkeeping bit, there's then that wider tax piece that we were talking about. And I think that's where the kind of value add is, that, we talked about, that is really exciting. And the benefit for us as those advisors with Xero, for those of you who don't know, is that Xero has such amazing reporting. So we use Xero for our accounts. For those of you who are our clients, for our GP accounts, we have got all this bespoke reporting, and we can really pull out so much data, and change the reports and tailor them to whatever the client wants. And that's not really about statutory accounting or tax. That's about advice. And that, for me, is, you can see that's how Xero's focused itself on that kind of client output, is that it's so easy to drill out information and give it to the business owner, rather than necessarily having, accruals and prepayments, all the sort of things that accountants get excited about.
Yeah, I mean, you don't have to know the lingo. Business owners equally can spot something. We keep going back to, why did I spend that much money on marketing? I don't market my services. And they don't even need to wait until their next scheduled appointment with the team at Ramsay Brown. Simply just hover over it, click on it, and they can see what 4 invoices have made up this sum of £3,500 that they just don't understand what's where. And they kind of go, oh yeah, that's right. Or, oh gosh, no, that's it, completely in the wrong place. I can't have that. And then they can fix it themselves or get in touch with you to do it. So I think it's the fact that when it's real-time information, things can be spotted early, and they can then be changed early. And we're not waiting and seeing things after tax deadlines have passed. Again, we've said this before, but there's nothing more frustrating than thinking, oh, we could have saved you, quite legally, not anything wrong, but we could have saved you a considerable amount of tax money here if we'd simply thought to invest a little bit more in your pension, or whichever way round it was. So I think getting in the habit of using digital tools like Xero, like Hubdoc, there's just benefits all round.
Yeah. We get this question a lot, which is from partners, GP partners who might own their own company. And a lot of the time they say, what dividends should we be taking out? And that's always a question that we get, because dividends are taxed obviously after corporation tax, but they're taxed at the rate based on what your other income's at.
Yes.
And once you get into the higher tax bracket, they're really expensive.
Yeah.
A point you alluded to earlier was that actually a lot of the spouses may have the rental income and the properties. And then they may also be a shareholder in a company and they may be taking out dividends. And they think, well, you told me last year to take out £20,000 dividends, so I took out £20,000 dividends. But of course, then they've got rental income. It pushes them into a higher tax bracket.
Yeah.
It's just a thought of that kind of wider tax planning as well on kind of a family basis as well. It's the opportunity to be able to generate that is really quite interesting that maybe we wouldn't have had before. Not because the information isn't there, I suppose, but because no one's reporting it to us on a quarterly basis.
Yes. Yeah. There's been lots of talk in the press about how this is going to be really onerous, but actually it's a change. I spoke to a friend who had me review his tax at the end of last year for submission, and that was his first year being self-employed, and it's not a medical profession at all. But when I explained to him the changes that were coming, he was actually really excited because he said that he'd spent so many evenings. He hadn't seen his children all week. I mean, I think his wife was angrier about that than anyone else. But because he just spent time getting everything together before even sending it to me to review. And he said, but surely it's going to be easier if I just do this once a quarter because there will be less to do. And I went, well, actually, that's a really good way of looking at it. You know, people don't get into business usually to get excited about their accounts unless they've set up an accountancy practice. But hey, Ramsey Brown have got the market there. They get into business to do the thing they love. And, you know, the numbers is something that it's a necessary evil. But we want to flip that on its head and make the numbers just as exciting to the business owner as it is to the accountants and those that are at Xero. So don't think of it as being something that, you know, oh no, I'm going to have to do this every quarter from now on. It's a change, but the sooner you adopt it, the sooner you'll get used to it. And actually, the sooner you will see immediate benefits because the team at Ramsey Brown will be able to say things like, oh, no, we want to put a stop to dividends this year. Or, you know, like we said before, oh, why are you not offering more Botox? I mean, yes, you should be offering it to me, I think, but, you know, why are you not offering this? This is a fantastic service line. You know, we could be doing more of this. Or why are you still working with that person? You know, they're taking 79 days to pay an invoice.
Yeah.
It's ridiculous, you know. So there's things like, I mean, we spoke about the benefits of invoicing, repeating invoices. There's also automated reminders. So you no longer have to remember to chase people when they owe you money. You'll see on the dashboard, you'll see that there's a big chunk of money. You'll see what you have to pay this month, but you can't pay this because you've got all this money waiting to come in. And you can set up sort of repeating credit control type invoicing as well. So it's just, you know, there's so many benefits to being digital that far, far, far outweigh the fact that you're going to have to do a little bit extra work initially to get used to it.
And if we cast the net a bit wider, because when we started this, we were talking about who's captured by this and, you know, made the point that this isn't partnership income. So it's self-employed income that effectively is sole trader or rental income. But the intention, of course, that partnerships will come into scope. Are there lessons that maybe partnerships, because particularly in healthcare, I mean, GPs are set up as partnerships generally. Is there a lesson that we could learn there? Do you think maybe that although they're not in scope yet, that GP partnerships who maybe aren't having digital records, and I'm pleased to say that most of our clients aren't in that position because they've had us banging down their doors saying, you've got to be on Xero, you've got to be on Xero, you've got to be on Xero. But is there a lesson maybe in terms of the sort of wider pieces, not just the digital records, but how you do your digital records, keeping your digital records up to date, using things like payment solutions and things like that? That's got to be something for people who aren't even in scope yet.
That there are so many benefits, and it doesn't really, we're talking about this because MTD for income tax is imminent. So it would be wrong of us not to mention it. But actually, over the years, so Xero's been around for nearly 2 decades. I've been at Xero for not quite that long, but almost as long. I think that initially, if you think back to the early 2010s, when people were, oh, I'm not very sure about this, it's in the cloud, you know, is it secure, etc., etc. If you think how our life has moved on, how many streaming services we all have, how much of our life is run on our phone. Apparently, 94% of invoices are opened first on a phone.
Wow.
So for those of you who are still sending invoices out in the post, that's really not the way forward.
Yeah.
But, whether they're paid by phone or not is different, but they're opened first on the phone, they're checked. And of course, if they are opened on the phone and you have that little online payment link there,
Oh, how
I
easy
can go
to do
straight to
that.
it.
Yeah.
I have, Katie knows that I have 3 dogs and we have daycare twice a week. It's very expensive. But the great thing is that when I do get the invoice, I can just click pay now and it's done. Because also they're running a business. They have 3 staff to pay. They have got their overheads as well. I don't want, I need that daycare. I don't want to be on the blacklist of like sort of bad payers. A few times I'm busy during the week and I forget. And on a Friday, I get a reminder. And then on a Sunday, I get a really quite a nasty reminder where I think, oh, they're not going to take my dogs back next week. But, you can do similar things as well. I think there are just so many benefits to knowing the position of your business. And, you've mentioned practices. They've got many other things to consider, like, staffing costs, things like that. They might be really stretched and looking to employ someone else. Now, actually, you may well find that automating a lot of things takes away the requirement to employ someone else. But actually, even if you're using automation and your business position is there for your accountant to see, they can advise you. They can say, well, no, actually, money's not really there to bring on someone else at the moment. Perhaps you want to just get a consultant for the next 2 or 3 months, see what's happening, and then you could look at employing someone.
Mm.
But, if the business isn't digital, it's going to be really hard for your team to give advice like that. Yeah, that's what your client needs from you.
Yeah. And I think for us, I mean, we, gone are the days where you can sort of turn up with a paper file and say, here's your accounts once a year, here's your tax bill, we'll see you next year. We like that constant communication with our clients. We speak to them regularly. We do quarterly updates with our clients on Xero. We sit down and go through. But the most frustrating thing is when you sit down and say, right, it's time for your quarterly management accounts. Oh, wait, your Xero is empty because you haven't
Yes.
done anything.
Yeah.
So I think that's the benefit, I suppose, the lesson we can learn from MTD. And I suppose that's probably why HMRC are looking at doing this is it's so important that the tools are only there if you actually use them. They're only
Yeah.
helpful if you use them. And so that's really kind of the key thing. So I would say to people, use the toolkits that you've got around you. Use Xero. It's an amazing, amazing, amazing piece of software. But if you're struggling to keep that up to date, don't be afraid to ask for help because
Yeah.
that's the most important thing. And there are people like us at Ramsey Brown. There are people out there who can help you, deal with this big change. It's a massive change. Whether quarterly payments come in next, we don't know. We'll see. But it really is. It's not really about compliance for us. It's a massive opportunity.
No, it is. I know that your team have developed a lot of tools, and not just around getting your clients ready for MTD and sort of like training, help pieces there, but just in general. And I think that, having someone talk you through the basic setup, because yes, it must be so frustrating to have your quarterly meeting and then think, oh, well, there's nothing here to discuss. And so if the business, be they a practice or a locum, doesn't have the time to do it, doesn't feel competent enough in doing it, you've got some great self-paced learning that they can do. Xero has some learning as well, although I will say that I've found, as we mentioned before, the medical profession is so bespoke that it would make sense to not just look at our learning, but do some of the things you've done as well. Or speak to one of the team, organise some individual one-to-one training for you, for your team. Think about who in the practice is going to be using Xero. Quite often the decision to use it is made by partners, but they're not the people who are filling this in on a day-to-day basis. It's the admin team out on reception. So make sure the right people get the right level of training. And then it's a tool that will help you so much make decisions for the future, look back on what you've been able to do over this last year, spot trends early. It's absolutely, I'm getting very excited now, but it's absolutely amazing thinking that you've got this information and you don't have to wait until 6 months after the fact to know what you've done.
So true. So true. Well, it's been a pleasure chatting through this with you, Diane. We've both been really excited, but that can tell you obviously is a big topic and is going to really affect how people do things. So it's been a delight as always talking to you. Thank you so much for your time. For our listeners out there, Diane actually did do a webinar with us a few weeks ago, which we can provide you the link with in more detail if you want to see about that webinar. It has a lot more about sort of how MTD works and also leads you to our MTD hub in terms of getting set up and if you've got any questions. But for now, thanks again, Diane, for your time, and we'll see you next episode.